In this section, we'll be learning about what is a candlestick and what are candlestick patterns. Candlestick is a chart type or a bar style that visually represents what the price is doing and what the price did in the past in the specific time frames. So there's multiple different types of chart styles. The one we talked about when I said that you will see a slanting line on the chart connecting the price points on the different days is called the line chart. Though it's very simple chart type, it doesn't give many crucial information on the price movement that was happening throughout the time frame. So that's why we use a candlestick chart style to get that very important information that are needed for the analysis. Now on candlestick, you won't see the lines on the chart that is connecting between 2 days and showing what the ending result was like on the line chart. But in the candlestick, it shows four important things. The first one is where the price started in that time frame. The second is how high it went in that time frame. Third is how low it went in that time frame. And the fourth is where it ended in that time frame, where the price closed in that time frame, which all of these information are very important for the strategy we're going to be trading. Now let's look at the anatomy of the candlestick. In candlestick, there is two things. One is the body, the second is the wick. On the body, you can see where the price started and where it closed. On the wick, you see how high or low the price went in that candlestick time frame. Now let's look at this 1 hour candle. And the price is starting here on $5 mark. And after 10 minutes, it went all the way up here to $7 mark. The candle color changes to green to show that the value of the security increased. So now you can see the candle has a body that starts here from $5 mark and goes all the way up to $7. But then it reversed in the next 5 minutes and went to $2 mark. So now you'll see a wick to the price point where it had gone before, showing what's the highest point the price reached in this hour. But now as the price is on $2 mark, the candle color changes. And now it's showing the price starting from $5 and where the price currently is, which is the $2 mark. But then after some time, that hour was coming to an end, and just before the time ran out, just before it ended, the price went to $4 and the candle closed as that hour had come to an end. So now you can see where the price started, which is right here. What's the highest point it reached, which is here on this wick. Was the lowest point it reached, again on the lower wick, and where the price closed, which is right here. So as we can see, the candlestick pattern gives us a lot of crucial information that are useful to our strategy. The candle body shows us the starting and the ending point of the price, and the wick shows us the highs and the lows the price reached while the candle was forming in that hour, or on whichever desired time frame you're charting. So this is what a candlestick is. Now candlesticks can be of multiple different types, but before we talk about them, we'll first look into the candlestick patterns. Candlestick patterns are very similar to chart patterns, but the focus is only on the previous 5 to 20 candles. Unlike in chart patterns, where the number of candles doesn't matter, in the chart pattern we look at the whole design the price made. But in candlestick patterns, we look at what recently happened, but also we don't use candlestick just any and everywhere in the chart. Candlestick patterns is used after we have analyzed the chart pattern and when the price is in the zone of interest. Candlestick patterns are mostly used as a confirmation pattern before we place the trades. But before we analyze the candlestick patterns, we need to analyze the chart patterns before, and we place the trades on the candlestick patterns once it has given us the confirmation at the zone of interest. But in this strategy, we don't need to look for candlestick patterns, but only singular different types of candlesticks. Now, what is a zone of interest? The zone of interest is a place where the price has a bigger probability to move in a certain direction. Now, how will we know what that place is in the chart? That if the price goes there, it has a bigger chance of move. Well, as we discussed that we analyze the candlestick patterns after we analyze the chart patterns, we get our answers after analyzing the chart patterns. Now, as we know from the previous chart patterns that the zones are created when the price makes the top or the bottom, which becomes the support and resistance zone. Another place where the zones are created are the trendy markets. When we're connecting the bottoms of the higher highs and higher lows, or the tops of the lower highs and lower lows. So let's say if we see any of these patterns being formed on the chart and after some time we see the price is reaching the zones or the trend lines. These are the zones of interest, and this is where we're looking for the candlestick patterns to form and give us the confirmation to enter into a trade. We don't look for the candlestick patterns just anywhere, but only when the candlestick pattern forms on the zone of interest. Now let's look at some examples. Example 1. So the first example is for the support and resistance zone as well as the break and retest zone because they're very similar. So on this chart we can see that the price created a top, and once the market creates a top, we draw a zone there. So this is the zone of interest. We'll be keeping an eye on this zone for when the price reaches here again in the future. And once the price is here, we'll be looking for either of the two things to happen. One being a reversal candlestick pattern formation, or second, the break of this zone, like if the price disrespects this zone and breaks upwards. But if we spot a reversal candlestick pattern, we can open a trade to the downside. But if we don't see that forming, and we see that the price is breaking outwards, we'll wait for the price to come back down to this zone after breaking out, and then we'll be looking for the reversal candlestick pattern to form over here that shows that the price is reversing from this zone and that the breakout was legitimate, and then we can place our trades over there. Now the same goes for when the market is going on the opposite side. If the price created a bottom, we draw a zone there and we keep an eye on that zone. Once the price reaches there in the future, we wait to see what happens, if it creates a reversal candlestick pattern or breaks downwards. And then whatever happens, we take the decisions based on the conditions discussed earlier. Now we'll be looking at another example, but this one is for the trend line trading. So in order to look for the zones of interest in the trendy market, we have to first see if the market is trending or is it in a consolidation phase. So if the market is trending, then you know that it's creating higher highs and higher lows if it's in an uptrend, and lower highs and lower lows if it's in a downtrend. So we look for the first tops and bottoms and then the second ones if it's higher or lower than the first one. And after analyzing the chart, we connect the two unaligned tops and bottoms, and that gives us the trend line. And this trend line is the zone of interest. Now, when the price comes back down to this trend line, we wait to see if there is going to be a reversal candlestick pattern or a breakout. And the ruling is the same as the support and resistance and break and retest examples that we talked about earlier. So as I said, that there are multiple different types of candlesticks, and that we'll be discussing about them after we have talked about the candlestick patterns. So here's what multiple different types of candlesticks are. Now, as there are many different shapes and sizes of candlesticks you will see on the chart, we don't need to know about all of them, but we only need to know about the three important ones. And also, these candlesticks have special names for them, but we're not going to be using those names to keep this as simple as possible. So the first one we'll be talking about is an indecision candlestick. This is how it looks like. It has a bigger wick and some to no candle body at all, but it has its variations. These are the variations. Like on image A, it can have a smaller wick but still have a smaller candle body. This on image B, it will have a bigger body but also big to medium length wick. And on this one, on image C, it has massive wicks but almost no body at all. These candlesticks, as it's called, an indecision candlestick, it shows that the market doesn't know where it wants to go. So if the market is in an indecision phase, we shouldn't make any decisions for trading as well. So we ignore and avoid all these candlesticks. Second one is one-sided long wick candlestick. This candlestick shows that the price has a little bit power to move towards a certain direction, and it depends on where it's forming and how it's forming. So for example, like on this image A, we can see that the candle has a long wick to the upside and has a full body to the downside. This shows that the price after starting here, it tried to go higher, but it was met with a lot of pressure from the traders, so it was driven down, and it had to close below the starting point, which is here, which shows that there is more pressure to the downside. Now on this image B, we can see that the price tried to go lower, but it was driven up, and it closed up over here. So just like the prior example, this is an opposite. This over here is showing that the price has more pressure to move towards the upside. Now on to the third type of candlestick. The third type of candlestick is the most important one. It is called the engulfing candlestick. If you know about this one, you most times don't have to look at other candlestick patterns. but just only this candlestick to base your whole decision on where to place the trades. Now, this is the most important candlestick, and this candlestick is a big part of our strategy, the strategy which will be taught in combining the Trinity section. So, how does an engulfing candlestick look like? Well, as it is the most powerful candlestick of all, it visually shows that on the chart. It stands out more than the other candlesticks, like the indecision ones and the one-sided wick candlestick. So, this is what an engulfing candlestick looks like. As you can see on both images A and B, it has no wick. It is full body. If it's on the upside, it's full green body, and if the market sentiment is down, it's fully red. But there are a few more rules to when this candlestick is legitimate. When you look at it in the chart, this candlestick should be standing out more than the others. It should be visually dominant. And depending on the side of the market, the previous 3 to 5 candlesticks before it should be smaller than this, as well as the previous one shouldn't be higher or lower than the high or the low of the engulfing candlestick. So for example over here, if the market is on the upside, as you can see, only this candlestick is the one standing out. Only this candlestick is the one standing out and bigger than the previous 3 to 5 candlesticks. And on the opposite side of the market, only this big red candle is the one standing out, and all the other candlesticks before it is small and weaker than this one. So this is what an engulfing candlestick is. This is very powerful candlestick, but only when it's happening in the zone of interest of the chart pattern. But not only the zone of interest in the chart pattern, as we're learning about a very specific strategy, we're going to be combining multiple of these things and using them to have a better edge at trading the forex market. Now moving on to the moving averages.